Hello friends, welcome back to another market update video. We're about halfway through the month of May, and I thought we could do a quick update on the economy, on the markets, earnings, inflation, and tariffs. So we'll try to cover all that. Here we go. All right, starting with the economy. We saw that the first quarter of 2025 GDP contracted at a rate of 0.3%, so that's negative 0.3%. While the headline was weak, and it is the first negative number since 2022, but the underlying economy is solid. What is called real final sales to private domestic purchasers, it's a mouthful, rose at 3%. So we actually would have had a positive GDP print, but imports subtracted 4.8%. Imports and net exports were 4.8% negative from GDP. So that brought us to a negative number. Government spending also subtracted a modicum amount. And without getting into the weeds like my golf game, I want to explain how this works. You have to look at the calculation of GDP. And within that calculation, they net out exports and imports. And it's usually negative, to be honest, for many, many years, but it's a very small amount. We had a massive surge in imports. So it was the largest drag to this GDP calculation on record as people tried to front run and get out ahead of the coming tariffs. So that's what happens. The numbers went negative, and lo and behold, we've got a negative print. But we don't think it's all bad. We think it's a lot of good, actually. But because of that, a lot of people have asked me with this data point, are we in a recession? Are we going into a recession? Again, no, we're not in a recession. And we don't think that we're going into one either. We don't think we're headed in that direction. There's still too many positive data points. And I will point to spending, since consumption is 70% of GDP. When you drill down and double click on spending, travel, TSA checkpoint data, that kind of stuff, hotel reservations, restaurant bookings, withholding taxes is an interesting one. And then the job market, jobs created. All these are giving us very, very good signs. So we don't think we're headed into a recession. Again, basically, it looks a lot worse than it is. And we'll have to see next quarter. We'll take it a quarter at a time. But as I mentioned before, our economists lowered the projection for this year from over 2% GDP growth down to about 1%. So we will see. Okay, turning to the markets, the S&P 500 has now recovered all of the losses since April 2nd, Liberation Day, the big tariff announcement. And a lot of commentary was made. It was very negative, and a lot of people were calling for a massive, massive drop, like Shedeur Sanders at the NFL draft kind of a drop. Too soon? Okay, we'll just let that go. Well, we didn't get that big drop. We really didn't. Peak to trough, markets did go down about 20%, just about touching on that bear market territory. It ended up being a nice round trip, month-long round trip, and we're back to where we were, even higher. And this is why we never react to short-term news and try to time things. The last video I recorded, if you want to go back and watch it, I spent a lot of time talking about market timing, actual data points on why it's so hard to time the markets, and the best days come right after the worst days, and you can't miss a couple of the best days. Anyway, so take a look at that if you want. Let's take a quick look at earnings. Earnings is kind of it's good news and it's old news. Let me explain. So earnings growth remains double digits. That's great. 77% of companies beat their EPS estimates, and the average magnitude of the beat was 9%. Both of these numbers are above their 10-year averages, so that is good news. But as I said, it's also old news, and that's because most of the data, it comes through the end of March 31st, 3/31. So the tariffs impact really hadn't hit yet. That starts in April for the most part. And so we got to look at the data after that. We'll be watching, we'll keep you posted, and we'll send you a video. But with regard to inflation, let's talk about that. We got a number released recently, and despite higher tariffs in April, inflation came in below expectations. Yes, CPI was at its lowest level since 2021 at 2.3%. That's a year-over-year number. The Fed probably saw that number and didn't feel like it needed to cut rates, probably feel like they didn't need to raise rates. They are at wait and see mode. We think there'll be 2 or 3 cuts, but we'll see in 2025. We're definitely going to be watching inflation. Let's wrap up with tariffs. I told you I'd give you an update on tariffs, and we have a big announcement this week. The biggest one, of course, and it had to do with the U.S. and China. And the U.S. and China have announced a trade deal to significantly reduce tariffs on both sides, at least for now. And this is 90 days. They need to paper the agreement. It's going to take some time to get it all down and signed off. But essentially, the U.S. tariff on most imports, there's a few carve-outs, but most imports came down from 145% down to 30%. Likewise, Chinese tariffs on most imports from the U.S. will decrease from 125% down to 10%. So that's the big deal. That's the big deal. You've got a 30% tariff and a 10% tariff, not 100 and something on both sides. And now we can resume basically normal trade between what amounts to the 2 largest economies in the world. That's why it was such a big deal. So 30% and 10%. We'll see how that works out, but we don't expect to see, empty ships and stuff like that. We expect to see things normalize, and you're not going to see empty shelves, hopefully, all that kind of stuff. But thanks for your time. Thanks for watching. Thanks for the great feedback. Reach out anytime with questions, and we will see you next time.